The information provided in this presentation is for educational and informational purposes only and is not intended as, and should not be understood or construed as financial, legal, or insurance advice. The content is not a substitute for advice from a professional who is aware of the facts and circumstances of your individual situation. We have done our best to ensure that the information provided is accurate, but we cannot guarantee that all the information is free of errors. You should consult with the licensed professional before making any financial or insurance decisions. You are almost certainly overpaying for your car insurance. I'm not talking about a few dollars here and there. I'm talking about hundreds, maybe even thousands of dollars every single year, being siphoned directly out of your bank account for a reason you've been conditioned to believe is a good thing: loyalty. Let me tell you about Mark. Mark was a model customer. For 12 straight years, he was with the same big-name insurance company, the one with the catchy jingle and the celebrity spokesperson you see every commercial break. He paid his bill on time every time. He had a clean driving record. In his mind, he was a valued member of their family. He thought his loyalty was earning him some kind of special treatment, a good customer discount. Then his teenage son got his driver's license. When Mark called his agent to add his son to the policy, the quote he got back was astronomical. It was so high he thought it had to be a mistake. But it wasn't. His reward for 12 years of loyalty was a premium that was about to double. Frustrated, Mark mentioned this to a coworker, who told him something that changed everything. He said, "You need to call an independent agent." Mark had never heard of that. He thought an insurance agent was just an insurance agent. But he was desperate, so he made the call. The independent agent asked him a few questions, took down his information and said, "Let me see what I can do." Less than 24 hours later, the agent called back. He hadn't found just one better option. He had found three. The best one? It had the exact same coverage as his old policy, included his son, and was still $400 cheaper per year than what Mark was paying before adding his son. He was speechless. All that money wasted for years, all because he didn't know the most important secret in the insurance industry. Not all agents are created equal. The story I just told you isn't an exception. It's the rule. Millions of Americans are trapped in the same loyalty penalty box as Mark, and the major insurance companies are counting on you staying right there. They spend billions of dollars on advertising to convince you that they are your friendly neighbor, a good pair of hands, or that you can save a ton of money in 15 minutes. But what they don't tell you is that the person you're talking to, their agent, has their hands tied. This is the first critical piece of information you need to understand. In the United States, there are fundamentally two types of insurance agents, and knowing the difference is the key to unlocking massive savings. First, you have what's called a captive agent. This is the agent who works for one and only one company. Think of your State Farm agent, your Allstate agent, your Farmers agent. These are dedicated professionals, but they are captive. They are employees or exclusive contractors of a single corporation. Their job is to sell you products from their company's menu. That's it. Imagine you want to buy a new smartphone. You walk into the Apple Store. The salesperson can tell you all about the incredible features of the latest iPhone. They can sell you an iPhone, an iPhone Pro, and iPhone Pro Max. But what they absolutely cannot do is sell you a Samsung Galaxy or a Google Pixel, even if one of those phones is a better fit for your needs and your budget. The Apple employee works for Apple. Their loyalty, their paycheck, their entire professional existence is tied to selling Apple products. A captive insurance agent is exactly the same. They can be the nicest, most helpful person in the world, but they can only offer you State Farm's auto policy or Allstate's auto policy. They are legally and contractually bound to one company. Now let me introduce you to the second type of agent, the industry's best-kept secret, the independent insurance agent. An independent agent is the polar opposite of a captive agent. They don't work for any single insurance company. Instead, they are independent business owners who represent multiple insurance companies. Dozens, sometimes even hundreds of them. They are not beholden to Progressive or Travelers or Nationwide. They are beholden to you, the client. Their job is not to sell you one specific brand of insurance. Their job is to find you the best possible coverage, for the best possible price, from their vast network of partner companies. Let's go back to our smartphone analogy. An independent agent isn't the Apple Store. They're the Best Buy. You walk into Best Buy and say, "I need a new phone." The salesperson doesn't just push the iPhone on you. They ask you questions. What's your budget? What do you use your phone for? Do you care more about camera quality or battery life? Then they can show you the iPhone, the Samsung Galaxy, the Google Pixel, and a dozen other options you've never even heard of. They can lay them out side by side, compare the features, compare the prices, and help you make an informed decision that is right for you. That is the power of an independent agent. They are your personal shopper for insurance. They do the comparison shopping for you, navigating the complex world of deductibles, liability limits, and endorsements across a huge swath of the market to find the perfect fit. At this point, you're probably asking two logical questions. First, if they do all this extra work, does it cost more to use an independent agent? The answer is a resounding no, and this is a critical point. It costs you absolutely nothing extra. Independent agents are paid a commission by the insurance company you ultimately choose to sign with. But here's the secret. That commission is already built into the price of every insurance policy, whether you buy it from a captive agent, directly online, or through an independent agent. The price doesn't change. The insurance companies have already budgeted for that cost of doing business. So you get the benefit of an expert personal shopper, a market analysis, and a dedicated advocate, all for free. You get more choice, more expertise, and more service without paying a single penny extra for it. The second question is, if this is so much better, why doesn't everyone do it? Why haven't I heard more about this? The answer is simple: marketing dollars. The giant, captive insurance companies spend billions of dollars a year to dominate the airwaves. They embed their jingles and their mascots into your brain from childhood. They want you to think of them first. Independent agencies are typically smaller local businesses. They can't compete with the multi-billion-dollar advertising budget. They rely on word of mouth and on providing such incredible service and savings that their clients, like Mark's coworker, tell their friends. They are the hidden gems of the financial world, operating just outside the glare of the primetime commercial spotlight. So the fundamental conflict is this. A captive agent's primary duty is to the insurance company that signs their paychecks. An independent agent's primary duty is to you, the client who trusts them with their protection. One has a limited toolbox with a single brand of hammer. The other has a massive workshop filled with every tool from every brand imaginable. One wants to sell you what they have. The other wants to find you what you need. Understanding this single distinction is the first giant leap toward breaking free from the loyalty tax and taking back control of your insurance costs. It's the difference between being sold to and being served. Throughout this video, we are going to dive deep into exactly how you can leverage this powerful advantage. We will break down precisely how they work, the questions you must ask them, how to find the best one in your area, and the step-by-step process they use to unlock savings that captive agents literally cannot offer you. You are about to learn the playbook that the insurance industry's insiders use, and it will permanently change the way you buy insurance. Okay, let's pull back the curtain on this playbook. The entire strategy, the secret sauce of an independent agent, boils down to one powerful game-changing concept: choice. It's the principle of the one versus the many. And understanding this single difference is like being handed a master key to a building where you've only ever been allowed in the lobby. First, let's talk about the world of one. This is the world of the captive agent. Think of the big names you see on every billboard, every football game. State Farm, Allstate, Farmers, American Family. These are fantastic, solid companies, and the agents who work for them are often wonderful, community-minded people. You might have gone to high school with them. They might sponsor your kid's little league team. You trust them, and you should. But here's the critical piece of information, the fact that is hidden in plain sight. They are contractually, legally, and ethically bound to sell you one thing and one thing only: their company's insurance. They are a captive of their brand. Imagine you walk into a dealership. You've been a loyal Ford driver your whole life. You love your Ford F-150. The salesman is a great guy, knows your name, asks about your family. You need a new car, and you tell him your budget is $30,000. He shows you a beautiful Ford Escape. It's a great car. It's $32,000, a little over your budget, but he tells you he can get you a loyalty discount and knock it down. Feels good. You feel valued. But what if, right across the street, the Honda dealership has an CR-V with more features, better gas mileage, and a sticker price of $28,000? What if the Toyota dealer has a RAV4 that's rated #1 for reliability, and it's right on your budget? Your Ford salesman can't tell you about those. In fact, he's not even supposed to know about them. His entire job, his mortgage, his ability to sponsor that little league team depends on him selling you that Ford. He's not a bad guy. He's just in the Ford business. That is precisely how a captive insurance agent works. When your policy is up for renewal and the rate goes up by 12%, they can't cross the street to see if Honda has a better deal. They can only look within the four walls of their own company. They can try to re-rate your policy, look for a new discount you might qualify for, maybe tweak a coverage to save a few bucks. But at the end of the day, they can only sell you Ford. If Ford decides to raise rates across the board in your state because of their storm losses last year, you're paying more. Period. The conversation ends there. This is the seductive trap of the loyalty discount. We've been conditioned to believe that staying with a company for years earns us some special status, some unbeatable price. But let's be brutally honest. That loyalty discount is often just a small percentage off a price that has been slowly, almost imperceptibly, creeping up year after year. It's the classic boiling frog scenario. A 5% increase this year, a 7% increase next year. You barely notice it. You figure it's just inflation. But after 5 years, you're paying 30 or 40% more than you were. And that little 10% loyalty discount feels more like a consolation prize than a real reward. It's a tool designed to keep you from shopping around, from looking across the street at the Honda and Toyota dealerships. Now let's step into the world of many. This is the world of the independent insurance agent. An independent agent isn't a Ford salesman. They own the entire auto mall. When you walk onto their lot, they don't steer you towards a specific brand. Instead, they ask you a different set of questions. They ask, what do you need a car to do? Do you have kids? Do you commute far? Is fuel economy your priority? Or is it cargo space? And what's your absolute, non-negotiable budget? You give them your information one time. Your name, your address, your cars, your driving history. And then they do something a captive agent is forbidden to do. They turn to their computer and access a powerful piece of software, an insider tool called a comparative rater. Think of it like the Expedia or Kayak of insurance. They plug your single set of information into this system, and it instantly goes out and shops the market for you. It doesn't just check one company. It checks 10, 15, sometimes 20 or more different insurance carriers simultaneously. Within seconds, a list pops up on their screen. It might show Progressive coming in at $2,000 for the year, but right below it is Travelers at $1,900. And below that, Safeco at $1,750. And maybe a regional carrier you've never even heard of like Erie or Auto Owners comes back with a killer rate of $1,500 for the exact same coverages. This is the fundamental difference. The independent agent's loyalty isn't to a single company. Their loyalty is to you, the client. Their job isn't to sell you a specific brand of insurance. Their job is to find you the best possible value for your specific needs, regardless of which company provides it. They are legally and ethically obligated to be your advocate in the marketplace. Now you might be thinking, how is this possible? Why is one company so much cheaper than another for the same person? And the answer to that reveals the deepest secret of the insurance industry. Every single insurance company has a different appetite. That's the industry term for it. Appetite. They all have a different idea of what their perfect customer looks like, and they price their policies to attract that specific type of person. State Farm, for example, might have decided they want to attract married homeowners over 40 with perfect driving records and multiple cars. So they create a pricing algorithm that gives huge discounts to people who fit that exact profile. If you're that person, you might get a fantastic rate with them. But what if you're 25, single, and have one speeding ticket from 2 years ago? State Farm's algorithm might see you as a higher risk, and their price will reflect that. It will be sky high. Meanwhile, a company like Progressive might have a huge appetite for exactly your profile. Their data might show that 25-year-old single drivers in your zip code are actually very profitable for them. So their algorithm is designed to attract you with a super competitive rate. A captive State Farm agent can't help you with that. They can only tell you what the State Farm price is. An independent agent, however, sees both prices. They see that State Farm is a bad fit, and they see that Progressive is a perfect fit. They don't just find you a cheaper price. They find you the company that actually wants your business the most and is willing to pay for it in the form of a lower premium. This is the power. It's not about just saving $100. It's about aligning your personal situation with the complex, hidden appetite of a massive marketplace. The independent agent isn't just a salesperson. They are a market analyst and a matchmaker, pairing you with the carrier that is algorithmically designed to give you the best deal. They take the guesswork and the hours of mind-numbing phone calls off your plate and distill it down to a simple, clear choice. They turn a system that is designed to be confusing and opaque into one that is transparent and competitive. But this raises a critical question. If you're getting quotes from companies you've maybe never heard of like Safeco or Travelers or auto owners, are they any good? Are they legitimate? If you get into a major accident, can you really trust them to pay the claim to have your back the way you assume the big household names will? The answer is not what you think, and it reveals a hidden hierarchy in the insurance world that the big brands spend billions of dollars in advertising to make sure you never, ever discover. To understand this hierarchy, you first have to understand that there are two fundamentally different types of insurance agents in the world, and they are not created equal. On one side, you have what's known in the industry as a captive agent. On the other, you have an independent agent. The difference between them is the single most important factor in the price you pay and the service you get. Yet 99% of people buying insurance have no idea this distinction even exists. They just see a friendly face in a TV commercial and pick up the phone. Let's start with the one you know, even if you don't know you know it. The captive agent. A captive agent works for one, and only one insurance company. Think of the big names you see sponsoring football games. State Farm, Allstate, Farmers, American Family. When you walk into one of their local offices, you are talking to a captive agent. They are, quite literally, a captive of the brand they represent. Imagine you want to buy a new pickup truck. You walk into a Ford dealership. You talk to the salesperson, you tell them your budget, what you need it for, the features you want. What is that salesperson going to sell you? A Ford. They're not going to tell you that a Dodge Ram might have better towing capacity for your needs, or that a Toyota Tundra has a better reliability rating. Why would they? Their job, their paycheck, their entire professional existence is tied to selling you a Ford. They might be the nicest, most knowledgeable Ford salesperson on the planet. They might know every single feature of the F-150, but they can only sell you what's on their lot. Their allegiance is to the Ford Motor Company, not to you and your quest for the perfect truck. A captive insurance agent is exactly the same. They are an employee of or an exclusive contractor for a single mothership company. Their primary legal and financial obligation is to that company. They can only offer you the products, the policies, and the prices that their one company has available. If that company's rates for someone with your driving record in your zip code with your specific car are sky high that year, tough luck. That's the price. If their underwriting rules have gotten stricter and they decide they don't want to insure you at all, too bad. The captive agent can't just turn to their computer and say, well, it looks like my company isn't a good fit. Let me check what 15 other companies can do for you. They can't. They are legally and contractually forbidden from doing that. Their only option is to try and fit you, a square peg, into their company's one round hole. This is the business model that has dominated the American landscape for a century. And it's brilliant. For the insurance companies, it gives them a massive, loyal, nationwide sales force that has no choice but to push their product. They spend billions on advertising to build a brand that feels as safe and trustworthy as your own grandmother, creating a powerful illusion. The illusion is that when you call their agent, you're getting an expert advisor who is looking out for your best interests. But you're not. You're talking to a salesperson with a single product on the shelf. Their job isn't to find you the best coverage at the best price on the market. Their job is to sell you their coverage at their price. Now let's talk about the other side of the coin. The side the big brands hope you never learn about. The independent insurance agent. An independent agent is the exact opposite of a captive agent. They don't work for an insurance company. They work for you. Let's go back to our truck buying analogy. An independent agent isn't the Ford salesperson. They are an expert auto broker. You go to the broker and say, here's my budget, here's what I need. The broker then goes out to the Ford dealership, the Dodge dealership, the Toyota dealership, and every other dealership in town. They get all the quotes, compare all the features, and read the fine print on the warranties. They come back to you and say, okay, based on everything you told me, the Toyota is the most reliable, but the Dodge has the features you want and is actually $2,000 cheaper. The Ford is a good truck, but for your specific needs, it's overpriced this year. That is what an independent insurance agent does. They represent multiple, sometimes dozens, of different insurance companies, big names you've heard of like Progressive or Travelers, and many more excellent, highly rated companies you've probably never heard of because they don't spend $1 billion a year on TV ads. When you go to an independent agent, their first allegiance is to you, the client. Their job is to take your specific situation, your cars, your driving history, your home, your family, and shop it across their entire network of insurance carriers to find the one that offers the best possible combination of coverage and price. The captive agent has one tool in their toolbox, a hammer with their company's logo on it. To them, every client looks like a nail. The independent agent has an entire workshop. They have hammers, wrenches, saws, and power tools from all different brands, and they can pick the precise right tool for your unique job. This creates a fundamental shift in the dynamic. You are no longer a sales target, you are a client to be served. The power shifts from the giant faceless corporation to you. Let me give you a real-world example. Let's call her Sarah. Sarah had a minor fender bender 2 years ago and a single speeding ticket. She'd been with a major captive insurance brand since she was 16, bundled with her parents. But her rates kept creeping up, and after her latest renewal, her 6-month premium was over $2,000. She called her longtime agent, the one who sent her a calendar every year. He was very polite. He looked at her policy, clicked his keyboard a few times and said, "I'm sorry, Sarah, with that accident on your record, this is the best we can do. Our underwriting is just very strict right now." Frustrated, Sarah mentioned this to a coworker, who suggested she call an independent agent. Sarah was skeptical. She'd never heard of this local agency, but she made the call. She spent 15 minutes on the phone giving the independent agent the exact same information she gave her captive agent. The agent said, "Okay, let me see what I can find. I'll call you back." 2 hours later, he called back. "Sarah, I've got good news. I shopped your policy with 18 different carriers. Your current company was, in fact, one of the worst possible options for you right now. But I found a company called Acuity. They're an A-rated carrier out of Wisconsin that has much more favorable terms for your situation. With the exact same coverage you have now, I can get your 6-month premium down to $1,100. Sarah saved $900, $1,800 a year, with one phone call, not by reducing her coverage, not by increasing her deductible, but simply by having someone with access to the entire market find the company that wanted her business the most. Her captive agent couldn't do that. He was forbidden. The independent agent's entire business model was built on it. This is the hidden hierarchy. It's not about geckos or mayhem-causing actors. It's about structure. It's about allegiance. Does your agent work for one company, or do they work for you? But this raises an even bigger question. If an independent agent can get you a policy from, say, Progressive, why wouldn't you just go directly to Progressive's website? Isn't cutting out the middleman always cheaper? The answer to that question is one of the most counterintuitive and closely guarded secrets in the entire industry, and it completely changes the way you should think about buying insurance. To understand why, you have to pull back the curtain on how insurance companies actually make money and get their products into your hands. See, we all assume there's just one big company, let's say Acme Insurance, and you can either call them, go to their website, or talk to an agent. We think it's all the same price, just different ways to buy. But that is fundamentally wrong. In reality, most large insurance carriers are not one monolithic company. They are a collection of different companies operating under one big umbrella, each with its own separate business model, its own profit and loss statements, and most importantly, its own pricing. The key is to understand the different ways they sell insurance, which are called distribution channels. There are 3 main ones. First, you have the direct-to-consumer channel. This is Geico, or when you go directly to Progressive's website. Their business model is built on one thing, advertising. They spend, and I'm not exaggerating, billions of dollars a year on commercials, billboards, and internet ads to get you to come to them. That gecko doesn't work for free. Flo's perky attitude is funded by a marketing budget that would make most countries blush. This astronomical cost, the cost of getting you in the door, is baked directly into the premium you pay. You are paying for the ads. The second channel is the captive agent channel. Think of a classic State Farm or Allstate agent. These agents work for one company and one company only. They are captives of that brand. Their cost structure includes their commissions, but also the cost of their local office, their marketing support from corporate, their training, their employee benefits. It's a massive infrastructure. And again, all of that overhead is baked directly into the premium you pay. Now for the third and most misunderstood channel, the independent agent channel. These are the agents who represent multiple different insurance companies. And here is the secret that changes everything. The insurance carriers who use this channel have a completely different cost structure. They don't have a billion-dollar advertising budget because they don't need one. Their advertising is the network of independent agents. They don't have to pay for thousands of local offices because the agents own their own businesses. Their entire business model is built around paying a commission to an independent agent for bringing them a customer. So when you ask, isn't it cheaper to cut out the middleman? You're asking the wrong question. There is no cutting out. You are always paying for the cost of selling the policy. The real question is, which cost structure do you want to pay for? Do you want to pay for the billion-dollar ad budget of the direct channel? Do you want to pay for the massive corporate infrastructure of the captive channel? Or do you want to pay the commission for the independent channel? Because here's the kicker. For a huge number of people, the commission paid to an independent agent is significantly less than the cost per customer that a direct writer spends on advertising. This leads to the most mind-blowing part of all. A company like Progressive, a name we all know, operates in both the direct channel and the independent agent channel. But they don't treat them as one and the same. They are, for all practical purposes, two separate companies. There's Progressive Direct, which you get when you go to their website, and there's Progressive sold through independent agents. And they have different rates. They have to. The math is completely different. The rate you get on the website is calculated to cover the cost of flow. The rate an independent agent can get for you is calculated to cover the agent's commission. And very often, those two numbers are not the same. I have seen it hundreds of times where an independent agent can get a client a policy with Progressive that is cheaper than the client could get for the exact same coverage on Progressive's own website. Let me give you an analogy. Imagine Nike. You can go to Nike's spectacular flagship store in the middle of New York City. The rent is astronomical, the staff is huge, the marketing is everywhere. You buy a pair of shoes for $200. That price has to cover all of that massive overhead. But you can also go to a small, local independent shoe store like a Zappos or a local running shop. That store also sells the exact same Nike shoe, but they buy it from Nike at a wholesale price. Because that local store doesn't have the same insane overhead as the flagship store, they might be able to sell you that exact same shoe for $170 and still make a profit. It's the same product from the same company, but the price is different because the channel it's sold through is different. Insurance is the same thing. Going to the direct website is like shopping at the flagship store. You're paying for the glitz and the glamour in the ads. Going to an independent agent is like going to the local shop. They don't have the same overhead, and they can often access a different pricing structure, a wholesale rate if you will, for the very same product. And this isn't just about getting a different price from Progressive. This is about unlocking a whole universe of insurance companies you've probably never even heard of. Companies like Travelers, Safeco, Nationwide, The Hartford, and dozens of others. These are A+ rated, gargantuan, financially stable companies. They are giants. But they've made a strategic business decision not to compete in the advertising wars. They don't have a cute mascot. Their entire business model, their entire strategy for growth, is built around distributing their products through the independent agent channel. You can't just go to their websites and get a quote. They've chosen not to play that game. So when you only shop with the companies you see on TV, you are literally ignoring 50, 60, maybe even 70% of the insurance market. You are leaving a massive number of stones unturned. You are willingly blinding yourself to a huge pool of competitors who might have the perfect policy at the perfect price for your specific situation. The independent agent isn't an extra layer of cost you have to pay. They are a key that unlocks the door to this other side of the market. The cost is already baked in no matter which door you choose. The agent's value is that they can check dozens of doors at once, including many you don't even know exist. So the idea that the middleman makes it more expensive is not just wrong. It's the complete opposite of how the industry actually works. You're not paying the agent on top of the premium. The insurance company is paying the agent instead of paying for a Super Bowl commercial. And that trade-off can very often save you a tremendous amount of money. So the big secret is that the price you pay is determined by the channel you buy from, not just the company. And by ignoring the independent channel, you're playing the game with half the cards missing. But this raises an even bigger question. If these agents have access to so many different companies, how do you know they're actually giving you the best deal, and not just the one that pays them the highest commission? The answer involves a surprising alignment of incentives that most people never realize. It's the multi-million-dollar question, isn't it? The one that cuts right to the heart of trust. And it's a completely valid concern. In almost every other sales environment, your suspicion would be 100% correct. The person selling you the thing is usually motivated to sell you the most expensive version of that thing. But the world of the independent insurance agent operates on a completely different, and frankly counterintuitive business model. To understand it, you have to stop thinking about a one-time sale and start thinking about a long-term financial relationship. The secret isn't in the commission percentage of a single policy. It's in the lifetime value of a happy client. Let's break it down with some simple real-world math. Imagine you're an independent agent, and you have a new client, Let's call her Sarah. You run Sarah's information through your quoting software, and you get two great options. Option A is with Prestige Insurance, and the annual premium is $2,000. Prestige pays a very generous 15% commission. So, if you sell this policy, you make a quick $300. Not bad. But then there's option B, from ValueGuard Insurance. Their premium for the exact same coverage is only $1,500. They only pay a 12% commission. If you sell Sarah this policy, you make $180. Now, the short-sighted rookie agent, the one who will be out of business in 18 months, sees the $300 commission from Prestige and immediately pushes that option. They make an extra $120 on that one transaction. They think they've won. But what they've actually done is plant a ticking time bomb in their own business. Because a year from now, Sarah is going to get her renewal notice from Prestige Insurance. She's going to see that $2,000 bill, and she's going to think, wow, that seems high. So she'll do what any smart consumer does. She'll call another agent or go online, and she'll get a quote from a company like ValueGuard. She'll discover she can save $500. She will cancel her policy with the rookie agent immediately, and that agent will never hear from her again. The agent made $300 once. The end. Now let's look at the smart agent, the career professional. They see the two options. They know they could make an extra $120 by pushing the more expensive policy. But they don't. They present both options honestly and recommend the one from ValueGuard that saves Sarah $500. They make a smaller commission, $180. But here is the crucial difference. A year later, when Sarah gets her renewal notice for $1,500, she'll see it's a fair price. She's happy. She trusts her agent. She renews without a second thought. And when she renews, the agent gets paid their commission again. Another $180. And the year after that, another $180. And the year after that, another $180. Over 5 years, the rookie agent who went for the big commission made a total of $300 from that client relationship. The smart agent who took the smaller commission has made $900. Over 10 years, the smart agent has made $1,800. They are literally making 6 times more money from the exact same client, simply by doing the right thing in the first place. The agent's long-term financial success is not just linked to the client's satisfaction. It is entirely dependent on it. But it gets even more powerful. Because that money, that stream of renewal commissions, is only the beginning. What does Sarah do when her brother complains about his car insurance rates at Thanksgiving dinner? She doesn't just say, you should shop around. She says, you have to call my agent. They saved me $500 and were incredibly helpful. The smart agent didn't just earn one client for life. They gained an unpaid, highly enthusiastic salesperson. That one referral turns into another stream of renewal commissions. And that person refers someone else. This is how successful agencies are built. Not by squeezing an extra $100 out of a single transaction, but by building an army of happy clients who become evangelists for the business. The rookie agent who overcharged Sarah didn't just lose her $1,800 in future commissions. They lost her brother's business, her co-worker's business, and her neighbor's business. They didn't just lose a customer. They poisoned an entire network. This entire concept is wrapped up in an industry term called a book of business. An agent's book of business is their single greatest asset. It's the entire collection of all the clients and policies they've written. This isn't just a list of customers. It's a tangible, sellable asset. When an agent decides to retire, they don't just close up shop. They sell their book of business to another agent, often for hundreds of thousands or even millions of dollars. And the value of that book of business is determined by one primary factor: the retention rate. What percentage of clients renew their policies year after year? A book filled with loyal long-term clients who were placed in fairly priced policies is a gold mine. A book filled with clients who were overcharged and left after 1 year is essentially worthless. So every single time an agent makes a recommendation, they are making a decision that affects the future sale value of their entire life's work. Pushing a high commission, low value policy to make an extra $100 today is the equivalent of taking a sledgehammer to your own 401k. It is profound financial self-sabotage. There's even one more layer of protection for you, the consumer, and it comes from the insurance companies themselves. Carriers like Progressive, Travelers, or Nationwide want profitable, long-term customers. It costs them a lot of money in underwriting and administrative fees to set up a new policy. They don't make a profit on you until you've been a customer for a few years. If an agent consistently sends them clients who are overpriced and cancel after 10 months, the carrier sees that agent as a liability. They are writing bad business. The carrier's analytics will flag that agent for having a terrible retention rate, and they will eventually terminate that agent's contract. This is the ultimate death sentence for an independent agent. Losing access to a major, competitive carrier means they have fewer tools to help their clients, which makes it harder to find good rates, which causes their retention to drop even further, leading to more carriers dropping them. It's a vicious downward spiral. To stay in the game and maintain relationships with the best insurance companies, an agent must prioritize retention. And the only way to achieve high retention is to provide genuine, long-term value to your clients. The entire system, from the agent's personal income, to the value of their business, to their relationship with the insurance carriers, is built to reward agents who act in their clients' best interest. Their greed, if you want to call it that, is best served by your happiness. Okay, so their incentives are aligned. We've established that the structure of their business model forces them to find you the best deal for their own good. But what does that process actually look like? When you call an independent agent, what are the exact steps they take to sift through dozens of companies and find that one perfect policy for you? It's a specific, multi-step process of investigation that separates the great agents from the merely good ones. It all starts with a conversation. But this isn't a sales call. It's a diagnostic interview. Think of a great independent agent less like a salesperson and more like a financial detective or a doctor for your risk. Their first job isn't to sell you anything. It's to understand everything. They're not just asking for your name and address to plug into a form. They are building a complete, 360-degree profile of your life, your assets, and your potential liabilities. A captive agent or a website can only ask the questions programmed into their system. What car do you drive? An independent agent asks, how do you use that car? Is it a 10-minute commute to the office? Or are you a sales rep driving 30,000 miles a year across 3 states? Do you use it to deliver for Uber Eats on the weekend? Because that changes everything. Does your teenage son, who just got his license, use it to drive his friends to football practice? An online form asks, do you own or rent? A great agent asks, tell me about your home. Do you have a swimming pool? A trampoline? Do you have a dog, and if so, what breed? They're not being nosy. They know that a trampoline is what the insurance industry calls an attractive nuisance, and that some companies will charge a fortune for it, while others are more lenient if it has a safety net. They know that certain dog breeds can make it nearly impossible to get homeowners insurance with some carriers, but they also know which specific carriers don't have those restrictions. They're asking about the future too. Are you planning any major renovations? Because a new roof could earn you a massive discount. Are you thinking of starting a small business out of your home office? Because your standard homeowner's policy will not cover that liability, but we can add a simple, cheap endorsement that will. Every question is designed to uncover 2 things: hidden risks you haven't thought about and hidden discounts you didn't know you qualified for. This discovery phase is the single most important step. It's the difference between buying a suit off the rack and having one custom tailored. The online form gives you the off-the-rack suit. It might fit okay in the shoulders, but it's too tight in the chest and the sleeves are too long. The independent agent is the master tailor, taking dozens of precise measurements to create a policy that fits your life perfectly. Once this deep dive discovery is complete, the agent moves to phase 2, leveraging technology. This is where their access to the entire market becomes a superpower. They don't just go to the Progressive website, then the Travelers website, then the Safeco website, typing in your information over and over again. That would take forever. Instead, they use a powerful piece of software called a comparative rater. They take all of that detailed, nuanced information they just gathered from you, the car usage, the trampoline, the home office, the student away at school discount, the new roof, and they input it one time into the sophisticated system. Then, with a single click, the magic happens. The rater system securely sends your profile out to every single insurance carrier they have a contract with. We're not just talking about the big national names you see on TV. We're talking about dozens of companies, including strong regional carriers that might be household names in Ohio, but that no one has ever heard of in California. These smaller, regional companies often have incredibly competitive rates and fantastic customer service, but you would never find them on your own. In a matter of minutes, the system starts populating with results. It's a flood of data, quotes from 10, 20, sometimes 30 different insurance companies, all pouring back onto the agent's screen. But this is where a common misconception can lead people astray. The agent's job is not to just look at that list, sort it by price, and pick the cheapest one. If that's all they did, they wouldn't be any better than a simple online search. This raw data is actually overwhelming and, to the untrained eye, incredibly misleading. This brings us to the most critical phase of the process: the analysis and strategy. This is where the agent earns their keep. They know that the idea of a true apples-to-apples comparison is a myth. A quote from Company A for $100,000 of liability coverage is not the same as a quote from Company B for the same amount. Why? Because Company A might have notoriously difficult claims adjusters who fight every claim, while Company B is known for paying claims quickly and fairly. Company A might exclude water damage from backed-up sewers, a common and devastatingly expensive claim, while Company B includes it automatically. The cheapest policy is often cheap for a reason. It's filled with holes, exclusions, and gotchas that you only discover after you've had a major accident and it's too late. The agent's job is to be your expert filter. They sift through that mountain of data, immediately discarding the carriers with poor financial ratings or terrible claim satisfaction scores. They're not just looking at the price, they're analyzing the fine print. They're looking for the company that offers the best specific endorsement for your unique situation. For example, they'll see that you have a high-end stereo system in your car. They know that one company limits coverage for custom equipment to just $1,000, while another offers a rider that covers its full value for just a few extra dollars a year. That's the kind of detail you'd never spot on your own. They also act as a master strategist, especially when it comes to bundling. A captive agent can only offer you one bundle: their company's home and auto package. They will always tell you it's the best deal because it's the only deal they have. An independent agent, however, plays chess. They might find that bundling your home and auto with Travelers gives you the best overall price. But they might also discover that putting your auto insurance with Progressive and your home insurance with a regional company like Erie or Acuity actually saves you an extra $400 a year and gets you significantly better coverage on your home. They can mix and match carriers to create the absolute optimal combination of price and protection, a level of customization that is impossible to achieve anywhere else. After all this analysis, they move to the final step: the presentation and recommendation. A great agent will never just email you a spreadsheet with 20 different quotes and say, "Pick one." That's not helpful. It's just outsourcing the confusion back to you. Instead, they distill all of their research down into 2 or 3 clear, simple options. They'll present it to you in plain English. They'll say, "Okay, here is option 1. This is the budget-friendly choice from a solid, A-rated company. It meets all the state requirements and saves you the most money up front. However, I need you to be aware that the property damage liability is on the lower side, which could be a risk if you cause a multi-car accident. Now, here is option 2, which is the one I personally recommend. It's $18 more a month, but it doubles your liability limits, protecting your assets far more effectively. It also includes roadside assistance and rental car reimbursement, which you currently don't have. Finally, here is option 3. This is the Cadillac plan. It's the most expensive, but it includes things like new car replacement and a disappearing deductible. It's for someone who wants absolute maximum peace of mind. Their goal isn't to push you into the most expensive option. Their goal is to educate you on the trade-offs. They explain what each option means in the real world, empowering you to make a smart, informed decision for yourself and your family. They transform a confusing, frustrating chore into a clear, confident choice. This multi-step process: deep discovery, market leverage, expert analysis, and clear recommendation, is the engine that drives the entire independent agent model. It's a system built not just on selling a product, but on providing genuine, customized counsel. And that counsel is the fundamental dividing line, the chasm that separates a transactional salesperson from a true lifelong advisor. Think about it. When you buy a product directly from a company, whether it's a phone, a car, or an insurance policy, that company's primary goal is to complete that one sale. The relationship is often transactional and temporary. But an independent agent operates on a completely different business model. Their success isn't built on a single sale. It's built on a long-term relationship. They aren't just selling you a policy for the car you have today. They're positioning themselves to be your go-to risk consultant for life. When you buy a house, they want to be the first call you make to bundle your home and auto for a huge discount. When you get married and your financial life becomes more complex, they're the ones to help you reevaluate your liability limits. When you have a child and suddenly the weight of the world is on your shoulders, they're the ones who can talk to you about life insurance and umbrella policies to protect your family's future. They become part of your personal board of directors, your CPA, your financial planner, and your insurance agent. This isn't about a single transaction. It's about creating a comprehensive, evolving shield of protection that grows and adapts right alongside you. A captive agent who only has one company's products simply cannot offer this level of dynamic, customized planning. Their toolbox is limited. An independent agent's toolbox is the entire marketplace. But let's talk about the moment when this all truly matters. The moment of truth. The car accident. The hailstorm that totals your vehicle. The fender bender in a parking lot. This is the moment insurance goes from a piece of paper in your glove box to one of the most stressful events in your life. If you bought your policy direct from a giant faceless corporation, what happens next? You call an 800 number. You navigate a phone tree. You wait on hold. You finally speak to a call center representative in a cubicle farm hundreds or thousands of miles away. They don't know you. They don't know your family. They don't know your situation. You are a policy number. You are a case file. They will read from a script, ask you a series of questions, and tell you what the next steps are, often in confusing industry jargon. You are on your own, navigating a complex, often adversarial process against a multi-billion-dollar company whose primary financial incentive is to pay out as little as possible on your claim. It's a daunting, isolating, and frankly terrifying position to be in. Now let's rewind. Imagine that same accident, but this time you have an independent agent. What's the first call you make? Not to an 800 number. You call your agent. You call Sarah or Mike or Jennifer, the person you sat down with who knows your name, who asks about your kids. You get a human being who is contractually and ethically on your side. Instantly, the entire dynamic shifts. Your agent becomes your advocate, your guide, your champion through the claims process. They will tell you exactly what to say, and more importantly, what not to say, to the insurance company's adjuster. They'll explain the process in plain English, cutting through the jargon. They know the adjusters at the companies they work with. They have relationships. When your claim gets stuck on someone's desk, your agent is the one who can pick up the phone and say, "Hey, what's the holdup on the Johnson file? We need to get this moving." They become the buffer between you and the bureaucracy. They ensure the paperwork is filed correctly. They help you understand the difference between betterment and depreciation. They can recommend reputable body shops. They fight for you if the initial settlement offer is unfairly low. Having an independent agent during a claim is like having an experienced lawyer walk into a negotiation with you versus walking in alone. They level the playing field. That peace of mind, that advocacy in your moment of crisis, is an intangible value that you can't put a price tag on. It is, for many people, the single most important reason to work with an independent agent. This brings up another huge, often misunderstood benefit: the agent as a single point of service. People sometimes think, oh, it's simpler to just go to one company's website. But in reality, that's the opposite of the truth. With an independent agent, you have one phone number, one email address, for every insurance need you have, across multiple companies. Let's say your auto insurance renewal comes up, and the rate has gone up significantly because of broad market changes. If you were with a direct carrier, what's your option? You have to start the entire soul-crushing shopping process all over again. You have to go to a dozen different websites, re-enter your personal information over and over, field calls and emails from salespeople, and try to compare a dizzying array of quotes with different coverage levels. It's a massive headache. With an independent agent, you just make one call. You say, "Hey Mike, my auto renewal just came in and it's higher than I'd like. Can you see what else is out there?" And your agent, who already has all your information, who already understands your needs, will simply reshop your policy across their entire network of A-rated carriers. They'll do all the legwork for you. They might come back and say, "You know what, we can move you to Progressive this year, save you $400, and get you even better coverage on your rental reimbursement." You say, "Great," sign a document, and you're done. Your trusted advisor relationship with Mike remains intact. Only the company name on your insurance card has changed. You maintain the consistency of service and advice, while they ensure you always have the most competitive product. That is the true one-stop shop. Now, I know what some of you are thinking. This all sounds great, but it has to cost more, right? There's a middleman involved. That's a logical assumption, but in the world of insurance, it's almost always incorrect. Here's why. You, the consumer, do not pay the independent agent a fee for their service. The agent is paid a commission by the insurance company they place your policy with. And this is the critical part. That commission is already built into the insurance premium, whether you buy it through an agent or not. Insurance companies have a budget for what's called customer acquisition cost. A direct-to-consumer company like Geico or Liberty Mutual spends that money on marketing, billions and billions of dollars on Super Bowl commercials, clever mascots, and endless online ads. A company that works through independent agents like Progressive or Travelers spends a large portion of that same budget on paying commissions to agents. From the insurance company's perspective, it's just a different marketing strategy. Instead of carpet bombing the airwaves with ads, they are essentially outsourcing their sales and service force to a network of trusted, local professionals. In many cases, the rates you get from an independent agent are the exact same or sometimes even better than what you could get by going direct. Why better? Because agents know which carriers are most competitive for your specific profile, your age, your car, your driving record, your location. They can pinpoint the 1 or 2 companies that will give you the absolute best rate, saving you the time of sifting through the 10 that won't. So you're not paying more for the agent's expertise. You are simply reallocating the insurance company's built-in marketing costs away from TV commercials and into the pocket of a professional advocate who will work for you for the life of your policy. When you look at it that way, the question isn't, why should I use an agent? The real question becomes, why would I ever not use one? You get the expert advice, the market access, the claims advocacy, and the long-term relationship, all for what is typically the same price or less. It's the closest thing to a free lunch you can find in the financial world. But this all hinges on one critical factor: finding a good agent. Because just like in any profession, there are superstars and there are duds. There are agents who embody this advisor-for-life philosophy, and there are others who are just looking to make a quick sale. So how do you tell the difference? How do you vet an agent to ensure they are the real deal? Someone who will be in your corner when you need them most. That process of finding and choosing the right partner for your protection is the key to unlocking all of this value. So let's break down that process. Think of it not as shopping but as hiring. You are the CEO of your personal finances, and you're looking to hire a chief risk officer. This isn't someone you just find in the yellow pages. This is a key advisor you need to interview, vet, and ultimately, trust with protecting everything you've worked for. The search starts locally. While the internet is great, insurance is still a deeply personal and often local business. Start with a simple search for independent insurance agent near me. But don't just click the first ad. Look at the websites. Do they feel like a professional advisory firm or a cheap quote factory? Read the reviews, not just the 5-star ones, but the 3- and 4-star reviews. That's where you'll often find the most honest feedback. But the single most powerful method is referrals. Who do you trust who has a lot to lose? Ask your real estate agent. Ask your mortgage lender. Ask your financial advisor or your CPA. These professionals have a network of other high-level advisors, and their reputation is on the line with every recommendation they make. They are not going to send you to someone who is incompetent because it reflects poorly on them. A referral from a trusted professional is like getting a pre-vetted candidate delivered to your doorstep. Once you have a short list of 2 or 3 potential agents, the interview process begins. Yes, you are interviewing them. This call is not about them selling you. It's about you deciding if they are worthy of your business. And you need to come prepared with the right questions. Question number 1, and it's a big one. How many insurance carriers do you represent? This question immediately tells you how independent they truly are. If the answer is 2 or 3, they're not really an independent agent. They're more of a captive plus agent with very limited options. Conversely, if they say they represent 100 carriers, that can also be a red flag. It might mean they don't have a deep, meaningful relationship with any of them. An agent with strong carrier relationships can be a powerful advocate for you. The sweet spot is typically in the range of 10 to 25 reputable, financially strong carriers. That gives them enough options to find the right fit for almost any situation, while still being able to build the kind of rapport with underwriters that can get exceptions made and tough policies placed. Question number 2, and this one separates the amateurs from the pros. Which carriers do you place the most business with and why? Listen very carefully to the why. A lazy or inexperienced agent will say, "Oh, they're usually the cheapest." That is the worst possible answer. A great agent, a true advisor, will say something like, "We have a strong relationship with Carrier X because their claims handling is exceptional. When our clients have a problem, they are fair, fast, and responsive. We also favor Carrier Y for high-value homes because their policy language offers broader protections for things like water backup and foundation damage." They're talking about value, about claim service, about the quality of the product, not just the price tag. They are demonstrating that they've done their homework on your behalf. This leads directly to question number 3, the moment of truth question. What is your agency's process when I have to file a claim? This is where the rubber meets the road. A shocking number of agents will just give you an 800 number and wish you luck. That is not an advisor, that is a call center. You are looking for an agency that acts as your advocate. The answer you want to hear is, first you call us. We'll walk you through the immediate steps, help you document the loss, and then we will report the claim to the carrier on your behalf. We have a dedicated claims specialist on our team who will be your point of contact, and they will follow up with the adjuster to ensure your claim is being handled properly and fairly. We are your first call and your advocate throughout the entire process. That answer right there is worth its weight in gold. It means you won't be alone when disaster strikes. Question number 4 looks to the future. How often do you review your client's policies? Insurance is not a set-it-and-forget-it product. Your life changes. You get married, you have kids, you buy a new car, you get a dog, you put a pool in the backyard. Every one of these life events can impact your insurance needs. A transactional agent sells you a policy and disappears, hoping you just keep renewing without asking questions. A relationship-based advisor will proactively reach out every year or 2 to schedule a review. They'll ask what's changed in your life and reevaluate your coverage to make sure there are no new gaps in your protection. This demonstrates a commitment to a long-term partnership, not just a short-term sale. Finally, question number 5 is a test of their ability to be a teacher. Can you explain uninsured motorist coverage to me as if I know nothing about it? Pick any coverage you're a little fuzzy on. Their response will tell you everything you need to know about their communication style. Do they use a bunch of confusing jargon and industry buzzwords? Or can they break down a complex concept into a simple, understandable analogy? A great agent is a great educator. They empower you to make informed decisions. If you leave the conversation more confused than when you started, they have failed. You want someone who can clearly and patiently explain what you're buying and why it matters. As you're having this conversation, you also need to be watching for red flags. The biggest red flag of all is an agent who leads with price and only talks about price. If their entire pitch is, I can save you 15% or more, run. A true professional leads with value, protection, and risk management. They seek to understand your needs first, then they design a protection plan, and only then do they find the most competitive price for that proper plan. Another red flag is any kind of high-pressure sales tactic. This quote is only good for the next 24 hours. You have to sign today to lock in this rate. This is the language of a desperate salesperson, not a confident advisor. A professional knows that their value proposition is strong enough to stand on its own. They will give you the time and space you need to make a considered decision. And perhaps the most subtle but most important red flag is an agent who doesn't ask you enough questions. A great agent is a great investigator. They should be asking about your family, your assets, your lifestyle, your commute, whether you have a home-based business, if you have a trampoline, if you serve on a nonprofit board. They are trying to get a complete 360-degree view of your life to identify potential risks you haven't even thought of. If they just take your name, address, and date of birth and spit out a quote in 5 minutes, they haven't done their job. They've just processed data. Ultimately, after all the questions and analysis, it comes down to a gut feeling. Is this someone you trust? Do you feel like they are genuinely listening to you? Do you believe they have your best interests at heart? Because when your house is on fire or you're standing on the side of the road after a major accident, the technical details of the policy will fade away. What you will need in that moment is a calm, competent, and compassionate expert in your corner. A human being you can trust to help you put the pieces back together. That is the person you're hiring. And choosing that person correctly is the single most important decision you can make. It's the difference between simply buying a commodity and investing in a partnership. But what does that partnership look like in action when things go terribly wrong? What happens when that 3 a.m. phone call comes in? Let's paint 2 pictures. In both, the unthinkable has happened. It's a rainy Tuesday night, and you're driving home. A car runs a red light and slams into your passenger side. The sound is deafening. Glass shatters. Airbags deploy. Your heart is pounding in your chest. You're shaken, but you're okay. Your car, however, is a wreck. In picture number 1, you have a policy you bought online. You saved maybe $20 a month. You pull out your phone, hands trembling, and find the 1-800 number on your digital insurance card. You call. You're met with an automated system. For a new claim, press 1. You press 1. You're placed on hold. Elevator music drones on as you stand on the side of the road, Flashing lights painting the scene in red and blue. After 20 minutes, a voice answers. A call center employee, likely hundreds or thousands of miles away, who has a script and a quota. You're just another number in their queue. You explain what happened. They ask you a series of generic questions. They give you a claim number. They say an adjuster will be in touch within 24 to 48 hours. And that's it. You hang up. You're alone. You have to figure out the tow truck. You have to figure out how to get home. The next day, you wait for a call that may or may not come. When it does, it's from an adjuster handling 150 other claims. You are just a file on their desk. You have to explain everything all over again. You have to chase them for updates. You have to argue with the other driver's insurance company by yourself. You have to become an overnight expert in total loss valuations, subrogation, and diminished value. The stress is immense. You're not just recovering from an accident. You're now working a second job as your own, unqualified claims advocate. That $20 a month you save feels like a pittance now. Now let's look at picture number 2. Same accident. Same fear, same shock. But this time you have an independent agent. You don't call a 1-800 number. You call your agent's cell phone. They pick up. They hear the panic in your voice and the first thing they say is, "Are you okay? Is everyone safe?" They calm you down. They become your quarterback. Okay, here's what you need to do right now. First, don't say anything about fault. Let the police report handle that. Second, take pictures of everything: the damage to both cars, the license plates, the intersection. Third, get the other driver's information and any witness contact info. While you're doing that, your agent is already at work. They are reporting the first notice of loss to your insurance company on your behalf, ensuring it's filed correctly with all the necessary details. They know exactly what information the carrier needs to get the ball rolling immediately. By the time you're home, the claim is already in the system. The next morning, you don't wait for a call. You get a call from your agent. "Okay, I've already spoken with the assigned adjuster, Sarah. I've given her the rundown. She'll be calling you today just to get your statement, but I've handled the preliminaries. I've also confirmed your rental car coverage is active, and I'm sending you a list of our preferred body shops in your area. These are places we trust, who do excellent work and are easy for the insurance company to work with." Do you see the difference? It is night and day. In the first scenario, you are a claimant. In the second, you are a client. This is the true, tangible value of an independent agent. They are your advocate, your translator, and your guide through one of the most stressful experiences of your life. The claims process is a labyrinth designed by insurance companies, for insurance companies. An agent is your personal guide who knows the map. Let's go deeper. What is the agent actually doing behind the scenes? They're not just a friendly voice. They are leveraging their professional relationships and expertise. When the initial damage estimate comes back from the body shop, the insurance adjuster might push back on certain repairs or the cost of labor. You wouldn't know if their objection is legitimate or if they're just trying to save the company money. Your agent does. They can call the adjuster and say, "Look, I know this shop. They use OEM parts, which the policy allows for, and their labor rate is standard for our area. This estimate is fair." That conversation between two professionals is infinitely more effective than you trying to argue a point you barely understand. What if the other driver was at fault, but their insurance company is dragging its feet or trying to deny the claim? This is where an agent is your champion. They will work with your insurance company to move the claim forward, potentially paying for your repairs under your own collision coverage so you can get your car back on the road. Then, they will support your company's efforts in subrogation, the process where your insurer goes after the at-fault party's insurer to get their money back, including your deductible. The agent makes sure this process is happening, keeping you informed and fighting to get your deductible returned to you as quickly as possible. And let's talk about the dreaded total loss scenario. Your car is declared a total loss. The insurance company offers you a settlement. How do you know if it's fair? They'll present a valuation report with a list of comparable vehicles. But are they truly comparable? Do they have the same trim package, the same mileage, the same condition as your car? You might spend hours researching on your own trying to build a case. Your agent has access to the same valuation software the adjusters use. They can run their own report. They can scrutinize the company's offer and find the flaws. They can point out that the comparable vehicles are 200 miles away, or they're a lower trim level. They can negotiate on your behalf, armed with data and experience, to increase that settlement offer by hundreds, sometimes thousands of dollars. That difference alone can often be more than a year's worth of premiums. This isn't a hypothetical. This happens every single day. The independent agent acts as a buffer against the stress, against the corporate jargon, against the lowball offers, and against the feeling of being powerless. They manage the entire process. They coordinate with the body shop, the rental company, and the adjusters from both insurance companies. You have one person to call, one person who knows your story from beginning to end. They provide the continuity that is impossible to find in a massive call center, where you speak to a different person every time you call. Think of it this way. If you were sued, you wouldn't represent yourself in court. You'd hire a lawyer. An insurance claim is a complex financial and logistical event with its own set of rules and procedures. An independent agent is your professional representative for that event. You are paying for a policy, yes, but you are also paying for the professional services and advocacy that come with it when you choose the right distribution channel. The premium buys the promise. The agent ensures that promise is kept. They are the human element in an industry that is often overwhelmingly impersonal. They are the ones who turn a confusing, frustrating, and frightening process into a manageable one, allowing you to focus on what truly matters, getting your life back to normal. And that, right there, is the heart of the matter. It's the fundamental difference between buying a product and gaining a partner. Over the course of this series, we've peeled back the layers of an industry that, for most people, feels like a black box. We started with the confusion of endless online quotes, the nagging feeling that you might be overpaying, or worse, that you might not have the coverage you actually need. We navigated the maze of jargon, deductibles, liability limits, comprehensive versus collision, and we exposed the hidden truth that the cheapest policy is almost never the best policy. It's often a trap, baited with a low monthly payment, but spring-loaded with devastating financial consequences when you need it most. We've seen that insurance isn't a commodity, like buying a gallon of milk or a tank of gas. It's a complex, personalized financial instrument designed to protect everything you've worked for: your car, your home, your business, your family's future. And trying to navigate this world alone, armed only with a search engine and a few catchy jingles, is like trying to perform surgery on yourself after watching a 15-second video. You might get lucky, but the risks are catastrophic. The solution, as we've discovered, isn't a secret algorithm or a magic discount code. It's a person, a licensed, experienced professional whose entire business model is built around one single principle: putting your interests first. An independent insurance agent. But their role doesn't end when you sign the policy. That's just the beginning. Think of it this way. When you buy insurance directly from a big-name company online, it's a transaction. You click, you pay, you get a digital document, and the relationship is essentially over until you have a claim or your bill is due. You're just a policy number in a database of millions. With an independent agent, you're not initiating a transaction. You're starting a relationship. This person becomes your personal risk manager for life. Life isn't static. It changes, it evolves, it throws curveballs. You get that promotion and buy a nicer car. You get married and combine your assets. You buy your first home. You have children. You start a small business out of your garage. Each of these milestones dramatically changes your risk profile. That minimum liability policy you bought when you were 22 and driving a beat-up sedan is dangerously inadequate when you're 35 with a mortgage, 2 kids, and an SUV. The homeowner's policy you bought for your starter home won't cut it when you've added a pool or finished the basement. Who is tracking this for you? Who is proactively reaching out and saying, "Hey, congratulations on the new baby. Let's take 15 minutes to review your life insurance and make sure your family is protected"? Who is calling you before your renewal to say, "I've shopped your policies with our 15 different carriers, and I found a plan with better coverage that will save you $400 this year"? It's not the 1-800 number. It's not the cartoon gecko. It's your independent agent. They are the ones who grow with you, adapting your protection portfolio to match the life you're building. They are your financial co-pilot, constantly scanning the horizon for turbulence you can't see, ensuring you have a flight plan that gets you and your family to your destination safely, no matter what storms you encounter. Now, I can hear the skeptics. There are 2 big myths that still persist, 2 final hurdles that might keep you from making that call. The first is the myth of cost. Doesn't using a middleman, an agent, make it more expensive? It's a logical question, but it's based on a complete misunderstanding of how the industry works. You do not pay your independent agent a fee, not 1 cent. Their compensation comes from the insurance company they place your policy with, in the form of a commission. This commission is already built into the insurance premium, whether you buy it online, over the phone, or through an agent. You're paying for the service of an agent whether you use one or not. So, the real question is, why would you pay for a service and then not use it? It's like buying a first-class plane ticket and then choosing to sit in the cargo hold. The value is there waiting for you. And here's the kicker. Because independent agents can shop the entire market on your behalf, they often find you a better price than you could find yourself. They have access to carriers you've never heard of, and they know which companies offer the best rates for someone with your specific profile, your age, your driving record, your zip code. So far from costing you more, a good agent almost always saves you money, while simultaneously increasing your level of protection. The second, and perhaps more modern myth, is the myth of do-it-yourself. I'm smart. I can use the internet. I can compare quotes myself in 15 minutes and save. And yes, you absolutely can. But what are you actually comparing? You're comparing price. You are treating a vital financial shield as a simple commodity, and the websites are designed to encourage this. They highlight the low monthly number in big, bold font, while the critically important details about coverage, exclusions, and endorsements are buried in pages of legal jargon. Did you notice that one quote has a $2,500 deductible, while the other has a $500 one? Did you realize that the cheaper policy has state minimum liability limits that would be exhausted in a minor fender bender, leaving your personal assets exposed to a lawsuit? Did you see the fine print that excludes water backup coverage for your basement, or doesn't provide a rental car if yours is in the shop after an accident? The 15 minutes you save by clicking Buy Now online could be the most expensive 15 minutes of your life. It's the moment you trade expert guidance for perceived convenience. It's the moment you choose a guess over a guarantee. An independent agent's job is to translate that fine print. Their value is in the questions you don't even know you should be asking. They are the firewall between you and a catastrophic coverage gap. This brings us back to the title of this video, Save Max Auto Insurance. We need to redefine what saving max truly means. It's not just about saving the maximum number of dollars on your premium. That's a novice's game. The pro's game, the smart game, is about maximizing your value. It's about maximizing your protection, so a single accident doesn't bankrupt you. It's about maximizing your peace of mind, knowing that a professional has your back. It's about maximizing your time by letting an expert handle the shopping, the paperwork, and the claims. When you see Save Max, don't just think about your wallet. Think about your future. Think about your family. Think about saving yourself from the maximum amount of stress, the maximum amount of financial devastation, and the maximum amount of regret. That is the true promise of working with an independent agent. So what now? You've spent this time with me, you've learned the inner workings of the system. Knowledge without action is just trivia. It's time to take control. It's time to put this knowledge to work for you. I want you to find your agent. Not tomorrow, not next week. Today. Here's your action plan. First, open a new tab and search for Independent Insurance Agent near me. Look for local agencies, not massive national call centers. Look for ones with a history in your community. Look at their Google reviews. See what real people, your neighbors, are saying about their experiences, especially when it comes to claims. Second, pick your top 2 or 3 and schedule a call. And I want you to think of this not as a sales call but as an interview. You are the CEO of your household, and you are interviewing candidates for the critical position of Chief Risk Officer. When you talk to them, ask these 3 crucial questions. 1. Which insurance companies do you represent? You're looking for a good variety. If they only have 2 or 3, they might not be able to offer you the best options. 2. What is your process when a client has a claim? Listen carefully. Do they sound like they'll be your advocate, guiding you through every step? Or do they just hand you an 800 number and wish you luck? You want the advocate. And 3. How often will you review my policies? The right answer is at least once a year, or anytime you have a major life change. You're looking for a proactive partner, not a reactive salesperson. Choosing an insurance agent is one of the most important financial decisions you will ever make. Yet most people spend more time researching what TV to buy. Don't make that mistake. Your television won't rebuild your house after a fire. Your streaming subscription won't pay for your medical bills after a car accident. You have the power to move from being a passive consumer, vulnerable to confusing marketing and hidden clauses, to being an empowered client with a dedicated expert in your corner. The entire system is built to be confusing, to profit from that confusion. But you now have the key. You know how to find the person who will sit on your side of the table, who will fight for you, who will translate the complexity into clarity. Insurance at its core is not just a contract. It's a promise. It's a promise that if the worst happens, you won't be alone. It's a promise that you'll be made whole again. An independent agent is the human being who makes sure that promise is kept. Find yours. It will be the smartest investment you ever make.